Hello everyone and welcome back to the Common Sense Crypto channel. As with you always, this is Rich doing another video today on XRP. So I hope you're all having a wonderful day today wherever you are in this great world. We're gonna talk about XRP. But if you're holding crypto, you gotta see this video. I'm gonna talk about taxable crypto events. And I'm going to take my time with this video because there's a lot of taxable events tied to crypto that people don't even know about. So looking at XRP on the one-day chart, we're sitting here just above 60 cents. It was somewhat of a green day for XRP, but again, no real price movement. People are still expecting $1 plus by the end of the month. I really don't think that's going to happen. I mean, I hope it does, but I think it's more likely in September. And I've been keeping an eye on the DXY because when the DXY falls, you can expect crypto to rise. I think we're going to see an even bigger pullback on the DXY over the next couple days as well. Let's see where we go from here. But like I said, I'm going to talk about taxable crypto events because a lot of people don't realize that there's certain taxes tied to crypto that most people don't even know about. So mining rewards. Mining rewards in the United States are considered taxable income and must be valued at their market price at the time they are received. So say you get mining rewards, but you don't cash them out and they lose value. You owe taxes at the time that you receive those rewards. Then there's staking rewards. Those are taxable as well. Rewards on yield earned by staking other cryptocurrencies will be taxed as ordinary income. And the same applies to any income earned by mining on networks. But a lot of people say, oh, there's no taxes on mining. Absolutely there is. Same thing with staking. Selling crypto for fiat, we all know that leads to capital gains. But a lot of people don't realize that when you sell a crypto and then you try to buy back in later, that's also a taxable event. So say XRP ran up to $1. Right? And you sold at that dollar, and then the price of XRP drops back to 50 cents, and you buy back in, you still owe capital gains on that other 50 cents. And it starts over as short-term holding then. In other words, when you sell your XRP to buy back in at a cheaper price, that's become short-term capital gains if you were to sell it for fiat. Buying goods and services using cryptocurrencies are also tax events similar to converting crypto to fiat. Although cryptocurrencies are decentralized, you still owe taxes to the IRS, and the IRS can levy capital gains and income taxes on crypto. And even if you are not reporting this, wherever you're sending that crypto from, they are reporting that you're buying things with your crypto. I remember a couple years ago, people were saying, well, I got the Uphold card, so I could just use my crypto and buy things and I never have to report it. Uphold is reporting that even if you're not reporting it. Receiving crypto as a gift does not incur taxes at the moment of receipt. The receipt assumes the original cost basis. But however, if you receive crypto as a gift and then you sell it later, you will then owe the capital gains. What I'm telling you is this: there's no way to avoid the capital gains. I seen someone saying that they're going to transfer the crypto to somebody that's underage and let them cash out the crypto. It's still taxed either way. There's no getting around that. Airdrops are subject to taxation at their fair market value on the date of receipt, which must then be reported as part of your gross income for that year. So airdrops are also taxable. I keep seeing people saying, well, it was an airdrop and that doesn't have anything to do with taxes. It absolutely does. What I'm telling you is these are taxable events that people are saying aren't taxable events. Receiving interest or yield in crypto. The IRS has also not yet provided clarity on whether minting tokens, including creating wrap tokens, publicly minting NFTs, or minting interest-bearing crypto, they don't know how to make that taxable yet. That's still coming. So if you were to go and say mint a token, and then later that token becomes a rug pull, you would most likely be on the hook for that later at a future date because they don't have any tax laws on that yet, same as NFTs. Capital gains tax we all know about. Like I said, there's short-term capital gains and long-term capital gains. If you've been holding your XRP for over a year, you're now long-term. But if you sell your XRP to buy back in at a cheaper price, now you're short-term capital gains, which is higher. And every time you do that, it's a taxable event. Trading one crypto for another in the United States. Trading one cryptocurrency for another is a taxable event. In other words, say you were to swap your XRP for XLM. That would be considered taxable. And it would be based on what you sold the XRP at to buy the XLM. These are going to become problems for a lot of people that are holding crypto in the near future. Because I remember back in 2021, I sold my XRP on Uphold to buy back in at a cheaper price. And now I'm on the hook for like $1,400. But it originally was $10,000. But I had to show that I didn't actually take that XRP to cash and that what I earned by buying back in was not what Uphold reported. Uphold reported that it was at a much higher price at that time. Getting paid in crypto. Cost basis represents the price you paid to acquire crypto. The IRS taxes you on gains based on your income bracket and how long you held on to the position. So say, for instance, you said to, I don't know, a company that you were doing work for, hey, I don't want to get paid in US dollars. I want to get paid in crypto. You still owe taxes on that crypto like it's income. And a lot of people don't realize that either. They think because they're getting paid in crypto that there's no taxes on it. There absolutely is. Sold a digital asset. If you sold, exchanged, or otherwise disposed of a digital asset you held as a capital asset, use Form 8949, sales and other dispositions of capital assets. And if you sold at a loss, you can also write that off. A lot of people don't realize that either. There's also losses in crypto, like with the fall of FTX. All those people took a hit. So that would become a loss on their taxes as well. Payouts for participation in liquidity pools. Nor is it clear at this stage whether depositing of which or withdrawing liquidity from DeFi liquidity pools using LP tokens is considered a crypto taxable event. Nobody knows yet on that, but crypto mining income is taxable. So far with staking, it's kind of in a gray area, but they know that they're going to eventually hit you with taxes on staking and providing liquidity. I think this is going to get enhanced over time, but we're not quite there yet. I think this is going to come later. But these are taxable events I wanted to go over with you a little bit, because some of these people are saying, oh no, airdrops are tax-free, mining rewards are tax-free. If you sell your XRP for XLM or trade it for XLM, that's not taxable. That absolutely is. And I wanted to clear this up a little bit because I don't want people to get unexpected paperwork in the mail from the IRS here in the United States. But this is coming to the EU, UK, other places. This is going to be worldwide because as we push ahead with crypto regulations coming, they're going to be MiCA-like regulations. And a lot of the tax laws that are going on in the US are going to be shared abroad and back and forth because everything is pushing towards global crypto regulations. Right now, this is US based. I know the capital gains tax is much higher in the UK and other places around the world. But, you know, the unrealized taxes, unrealized capital gains that they're proposing, that's far worse. Because say, for instance, you're holding XRP and you've been holding it for, say, 3, 4, 5 years. Along the way, there's going to be run-ups, and maybe you didn't sell your entire bag. You still owe those taxes. I still look at that as them trying to shake you out of your crypto, forcing you to sell your crypto just to cover taxes. And the same thing almost happened with me back in 2021. Like I said, I didn't realize that was a taxable event until I got the paperwork from the IRS. Most likely I'm going to get more of that paperwork because I did it with other cryptocurrencies, not just XRP, but I did it with XLM at one point and even Nexera. And you know, if you're not reporting it, someone else is. That's what I'm telling you. If you're holding your crypto on Uphold and you're doing this, expect a form. Same thing with Coinbase, because now all the exchanges are also following the rules with the IRS. They have no choice but to follow the rules, or eventually they're no longer going to be an exchange. I still think we're going to watch a bottleneck happen with exchanges, and only a handful of exchanges are going to be left in the future. And I think Coinbase and Uphold are definitely going to still be with us. LCX is another one. Kraken as well, because I think Kraken is really pushing to become compliant along the way. But, you know, we're not at that point yet. But a lot of people are going to make a lot of money in the very near future. And you don't want to go out and end up spending a pile of cash and then realizing, oh no, I'm on the hook for a couple $100,000 or even 20, 30, 40 grand. You don't want to have that surprise come back to haunt you, is what I'm saying. And a lot of people ask me, where are we at with alt season? We are yet in phase 1. ETH hasn't hit a new all-time high yet. But when that happens, the biggest alt season in history will start, and the road to $1 will begin. Believe it or not, I think XRP is going to achieve $27 plus in this next alt season. But where we're at right now is still phase 1. I'm expecting Bitcoin to start running up once again. So flow of money moves into Bitcoin, causing price surges. Phase 2, Ethereum is outperforming Bitcoin, and we hear talks of the flippening. Phase 3, large caps. Ethereum has been outperforming Bitcoin, and large caps are going parabolic. By phase 4, everything is going to be having blow-off tops, and it's going to be a very exciting time. But if you plan to cash out some of your crypto, don't forget about the capital gains. That's what I wanted to really talk about in this video. And hopefully I cleared up some of your questions that I've seen over time in the comments section. And hopefully I gave you some clarity towards crypto taxes. But until it all happens, stay patient, stay positive, and let's get rich together. With that said, I'm going to wrap up this video. I want to thank you all for watching. I appreciate all of you. I'll see you in the next one. Have a great night.